Hello, everyone. Happy Monday. How's everyone doing? Hope everyone had a wonderful weekend as spring approaches soon. After the sell off on Friday. Good morning, Mark. Good morning, Patrick. Let's see. Good morning, Sterling. What's wrong with Pantera on leg day? What's wrong with Pantera on leg day? Uh, no, I'm interested to see how what happens when they deploy their full self-driving features in China. That's going to be interesting. Hey, Bullseye Cheetah, as a novice starting trader, I've collected 70 points on micro E minis last Friday. Thanks, a path. Well, I'm glad it's helping you learn. Remember, don't get cocky. Remember, you're still going to have losses. And remember, always manage your reward to risk. And also, this is why we look at both sides of the market because, again, I was choppy to slightly bullish on Friday until we took out the key levels where I said if it goes below this, kiss it goodbye, and we kissed it goodbye. But that's why you always analyze both sides of the markets to come up with your bull and bear case. Good morning, Royal Palms. So you don't get caught in a mindset. What else? Yeah, I saw this. This was a minimum wage worker would have to work under 6 hours a week to afford a typical U.S. apartment, according to Redfin. What else? What else? Good morning, Heinrich. Good morning, Jacob. So, what else? Apple's investing in a new, uh, including new Houston facility for Apple Intelligence servers. Well, yeah, Apple Intelligence is such a misnomer. I've played around with Apple Intelligence and it's not so smart yet. All right, by the way, Friday, let's just recap because these numbers are very interesting. We had the services PMI coming out dip into contraction. Going to be watching that to see if it stays in contraction. But that was a big drop on services. Now, this is small to mid size, but remember, we're a services economy. And even though manufacturing bumped up a bit, we have services, which is over 70% of this economy is services. So, and then you have consumer sentiment, inflation expectations through the roof. Now, some people are going to say, well, it's skewed by political stuff and everything else. Well, it was skewed the other way by political stuff. So you got to somewhat balance that out. And we've been watching even the numbers before these consumer expectations, been watching inflation expectations still rise. Now, they might be overdone due to some political leanings of some respondents, but look, 5-year inflation expectations 3.5, up from 3.3. Short term at 4.3, up from 3.3. So let's say you just dial those back again. Let's say you dial this back to 4% or even 3.8%. This is not anchored. This is not anchored inflation expectations. The Fed is really in a tough spot now. So I want to get rid of those people. Now, this week's going to be interesting. Not much today. We got the Dallas Fed Manufacturing Index and the Chicago Fed National Activity Index. But tomorrow, we got some Fed speak. We got the regional Richmond and Dallas numbers. Wednesday, we got the crude numbers, as always, unless there's a holiday, and we got Bostic speaking. So the beginning of this week's starting out fairly quiet at the beginning of the week. However, Thursday, durable goods, GDP, core PCEs relating to GDP. Now, that's backward looking. This is the second revision of the fourth quarter numbers. So that's, it's going to be interesting to see how those come out. We got Kansas City, a lot of regional indices this week, and we got more Fed speak. Lots of Fed speak on Thursday and then Friday. The all-important PCE numbers for January. So if this comes in a little dovish because this has different weights than the CPI, and based off of the estimates of healthcare costs pulling back, this could come in slightly dovish and cause another rotation back up, but we will have to see what comes in on Friday. So Friday is going to be very, very key. So far this morning, worst week since October last week in the broad markets. So far, Apple down a little, but all your other mega caps are up, trying to bounce a little. Everything this morning, I think every sector is positive. Consumer defensive is technically flat at this point. It was up a little earlier, but every other sector positive, led by comm services and financials. Fed watch, we now have, based off the sell-off last week, the first cut happening in June, and then another cut in December. So 2 cuts priced back in the market now. Fear and greed, still solidly in fear mode. Back below 38 Schiller PE, but by no means a cheap market. Domino's Pizza reported today, which was a miss. And by the way, would not be rushing out to buy Domino's Pizza at 28 times earnings, especially with a miss on revenues. And Domino's Pizzas offer a lot of specials. And if they're starting to hurt, that should tell you something. Now, this week, in terms of other earnings, not really a lot after, besides Zoom, after the close today. But tomorrow, pay attention. Oh, why is that spinning? Is it, yes. Oh. I don't know why that's spinning, but I got a spinny bouncing ball on my end. I got to deal with this Max having troubles. We got Home Depot tomorrow morning, so keep an eye on that. Other than that, nothing much tomorrow afternoon. Wednesday, we got Lowe's. Now, Wednesday and Advanced Auto Parts. Interesting from that, from the home renovation aspect, because housing's really slowing down and people are somewhat running out of money, at least the lower and mid-end. And Advanced Auto Parts, do-it-yourself auto, that's going to be another interesting stuff. And then the big one after close on Wednesday, NVIDIA. Headed into the GDP numbers on Thursday. So Wednesday afternoon, and you got Salesforce, Snowflake, but the big thing is going to be NVIDIA. Thursday morning, we got the GDP numbers, but nothing major in earnings. After close, you got Dell. And then nothing much on Friday besides your PCE numbers. So that lays out this week. Let's see what else is going on. Let's see what else. Let me scroll back through here. Good morning, Daniel. Hello, Charles. Chicago National Activity Index actually comes in 0.03, forecast 0.05, so a little better, but still back in negative territory. Good morning, Ted. That's a minor index, too. So, good morning, McRangers. Good morning, Eric. URA nearing third targets. Any thought on this messy double top in the monthly, which is a technical triple? Again, I'm still watching for the break longer term, but it's in that trading range. We can look at URA if we have time. Inflation is set to rise even further. Philadelphia prices paid index jumped 8.6 February. Yeah, and you're seeing more layoffs too, as Sterling put in here. Like Starbucks is laying off 1,000, not barista levels, but corporate jobs. We're seeing more and more layoffs. Regional inflation indices have been rising for the fastest pace since 2020. So there's lots of, again, I'm not saying inflation is going back to 5 or 6%, but if it gets stuck around 3%, even goes up to 3.5%, the Fed's in a really tough, especially with Trump wants cuts. You know, you start cutting short-term rates. And what is interesting to me is the 10-year is not really reacting, that the yield is not reacting to the upside that much. Now, on Friday, it got hammered. You can see here the yield pulling back as you had a flight to safety. So big drop on yield. This is the yield chart. This is not a double bottom. This is just 2 bottoms. Why? You can still watch this key inflection point right at the 62.5, but your target would not be double bottom targets. So I'm really seeing if we get some kind of bounce pattern in here. There is not one set up. Back to the S&P. On the weekly, we're still holding the weekly rotation zone. So weekly is still bullish. The daily is really in neutral mode to me. Neutral mode to me. We have cycles down on the daily and cycles still headed down on the weekly. So there could be more consolidation / pressure going into the end of this week on the markets. That's what I'm paying attention to. There's no guarantee we get a super strong bounce. If there's a pattern to trade, then that's fantastic. You know, I'm going to be watching to see if we form a more significant bottoming pattern going into the open. The key breakout level for me is this 60, 62, 60, 63 area for anything sustained above there. Okay, the key pullback area is still 60.43. And then if we did drop, if this pulls back either, today or tomorrow, because on the 4-hour, you can see if this does pull back, I'm going to be watching if it pulls back. Why is that not anchored? There we go. There we go. I'm going to be watching this key 60.40, 60.46 to 60.40 as a key support zone. We close below 60.40, then I'm watching for the potential pullback to make it double. The key levels to watch for a further downside break. It's a really big area right around 60.15. So pay attention. If we roll over and continue downward pressure, not necessarily today, but this week, pay attention to 60.15. Okay, that's very key. Now to the upside, back to the upside. If it does, I'm watching the 4-hour rotation zone, especially as we come into this key high. So we get above that 60-62 area. The next area is 60-70. You get above 60-70, then I'm really focused on a return to about 6100 to 6105. All right, and I'm in neutral mode. Again, bullish mode still on the weekly. Slightly bullish mode still on the weekly. Daily mode is neutral. Means I can, if there's sell patterns, then they have equal weight to buy patterns. And overall, keep the overall picture. Look, we're back to the same levels we were trading in the middle of November. We had the election run up, then the pullback, but we're back to virtually the same levels we were trading at the middle of November. So we've gone up, we've gone down, and a whole lot of nowhere, but still a slight upward bias. NASDAQ still holding the weekly rotation zone. Cycle's still headed down on the weekly. On the daily, cycle's still headed down, coming straight down to the 50 EMA. If that breaks, key levels are 21,500 to 21,520 as major support if we break through Friday's low. And then the next key level is 21,308. To the upside, it's really got to break above right around 21,815. 21,815 is very key for me. That's right in this area. It's actually right in that area. Then to sustain something, it's got to get above 21,850, and then I'd watch for a potential return to about 21,950 area. Same thing, if we do roll over, this is a 200 simple on the 4-hour, which was just was this minor support area base that was formed back on the 11th and the 12th of February. So if we roll back down, I'll be watching for a potential double to form. Again, if these lows break, it's 21,515, 21,520 area is the next key support. Dow. Little bounce in here, little bounce in here. If this didn't extend too far sideways, this would have triggered the double top. Now with the rotation zone rolled over, we're watching for rollover plays. Very major resistance is about 44,100 on any bounce. In order for me to get anything bullish on the Dow, it's got to get back about 44,100, and that's sustained. There is no major bottoming pattern just yet on the Dow. It's come up to that 4-hour rotation zone. So if you're going to take something away, watch your 4-hour rotation zone on pretty much all the markets, all the majors. Russell selling off, breaking the support, coming back down to the other support level is 2196 on Friday. So major resistance. Your first major resistance is 2248 and then 2263. If we take out, remember, we no longer have the potential double, and within this double top that's still triggered and has never been invalidated, we still have magnet prices lower. So now we consolidated for a long time, but I'll be focused on more rollover plays in the Russell on any bounces. We still have magnet prices lower. VIX, little elevated from Friday's price action, but again, remember, if you're going to err on the side of stuff, I would not be selling volatility when it's cheap. I'd be a buyer of volatility because we get days like Friday and you still have the Trump factor and everything else. And people are still too lackadaisical in this market. So if you're structuring plays, I'd investigate structuring them with long volatility in some way to the up and to the downside, because you can still get up plays and volatility might not drop, and then you get retracement plays where volatility spikes. The DAX after the election in Germany, it pulled back to rotation zone. You had the election in Germany, but I'm paying attention to Friday's high. Why? A follow through close above that. We have a rotation zone and a percent B buy. Now, there's no guarantee that's triggered. It's already pulling back. We'll have to see what the government coalition there is. But the key level for anything to be sustained on this bounce has got to then close above 22,690. Notes, little rallies still based off of Friday's price action. See, the 10-year yield is just not acting very hawkish. It's acting like we're going to tip into more of a recession, which I think we're going to, but we get a recession with sticky inflation. You got stagflation written all over it. Some things will get disinflation, but other areas are getting sticky, as Sterling pointed into the chat. As Sterling put into the chat. Dollar index, trying to get some buying pressure in here. Remember, triggered this channeling double. We talked about that in depth last week. I'm going to be paying attention to where we close in relation to Friday's high. Could be a little minor percent be buy, but really tight reward to risk there. And you're going against the double pattern. Crude, we had the double top, which triggered here on Friday. Got the little bounce, and then the sell-off with the market, which was acting like it was, again, going into a recession. Now, the double that never triggered to the upside. Remember, we talked about the front run pattern, and then we got the double top that triggered. So that was the exit on any front run pattern, and then it just went tank-ola. But also, now gapping below very key support. So this very key support since the beginning of February was broken by this morning's gap down. So I'm more focused on a continuing pullback into this 68.30 on any rallies. And there's no super strong bottoming pattern just yet. Gold still holding up there. Here's the daily holding up with the daily rotation zone. Still in consolidation. Still in consolidation. Still very overextended with weekly cycles at the top. Gold really needs a pause, but looks like it's trying to break out to the upside still. Again, made a new high in the futures contract. So, other than that, there's no bearish pattern other than being very overextended. What else do we have? What else? Yen against very major support. Going to be watching for some potential bounce pattern with cycles at the bottom, but that's only a bounce pattern for the time being. The spiders coming back down to the 50 EMA, going to be gapping up this morning. The key kiss it goodbye level is 600 on there, and then 594.29 is the next major support level. On any rally, I'm just still using the other harmonic levels. So we are gapping up this morning, but I'm going to be looking at 603.75, and then the major, dropping this down, the major support is about 606.90 to 607. The major resistance, I should say. Qs closing below the daily rotation zone. Remember, the weeklies are still up. The weekly Qs still have a potential double top. The weekly spiders still have a potential double top. Also, the weekly spiders you see against the hit up coming up last week to the key harmonic and reversing. The key minor harmonic, I should say, but you still have potential double tops on the spiders and the Qs on the weekly basis, but nowhere near triggering yet. If we take out Friday's lows, your first support level is 522.35 area, which you see multiple lows in there in the 50 EMA, and then 520.26. What else do we want? Oh, URA then. Uranium coming back down to the second target, little gap up, but this is where I'll start watching down in here for a major thing. Also closing below the 62.5 on Friday. Uranium's also pricing in an energy slowdown, but see, the funny thing is stuff like AI and everything else is still going to need energy. So, and uranium, this could get interesting at some point, but again, we have never broken out yet. On the monthly, we have multi-tops up here, but I'm watching for pullback in this key support. That's what I'm watching. And then, if we set up a pattern like we did before, remember it formed a double bottom. Also against a 200 simple. Look where the 200 simple and the final target is. So yeah, we had a little spike up, but never invalidated the double pattern. So thank you for bringing that up. Home builders, I tweeted this out. We have a weekly head and shoulders. It's a little sloppy because you don't have symmetrical shoulders, but this did trigger. So I'll be watching on any housing rallies for rollover plays. And we could easily return over the next few weeks to couple months to the 200 simple and the prior major resistance becoming support area. So I'm going to be looking at that longer term. What else did you put in here? Amazon. Amazon's also back to the weekly, very key weekly support at the bottom of the weekly rotation zone. Getting another bounce here, but if we start taking out last week's lows in Amazon, the next major support level is 200. Keep an eye, close eye on Amazon. Also, it broke down from this wedge pattern last week. I've been watching this wedge pattern. We don't highlight this all the time, but I've been keeping an eye on this. If we take a look at that, the technical target area is just below the 200. I'd really be focused on the 200, but we could easily, on any rally and rollover plays in Amazon, be looking to return to this 200 level, possibly even slightly below that. So that's a good, yes, barely holding on to support. Getting a little bounce today, but going to be watching this on the weekly basis. We're right at the bottom of the weekly rotation zone, and we've triggered a daily sell pattern. So rallies, in my book, are watching for rollovers. It is a dark screen. You got to manage. You should not be blowing up accounts like this. I feel bad for you, but you got to manage reward to risk. The way you stick around as a trader is you're in the game a long time, and you have to manage reward to risk. That is the name of the game. Again, everybody's going to have losing trades. You're going to have strings of losing trades. The market sometimes just gets, like the market is in the S&P and NASDAQ, it's very choppy right now and schizophrenic. There are some setups, but you got to wait for the high probability setups and not overtrade and constantly manage reward to risk. And always look to slim down your risk as fast as possible without jeopardizing the pattern. Tesla, still going to be watching. I mean, there's a little big bounce up on that China news, but is there a strong buy pattern in here? No, I'm still watching it reconnect with the 62.5 and the 200 area. NVIDIA, pretty bearish on Friday, but nothing that broke key support, major support yet. What else? As Sterling mentioned that the Russell was the lowest close since October 3rd. Was it? I mean, we had a close in January, but I think we closed below the, yeah, we did. So this again. I'm now shifting on like things like the small caps, the Dow to more of a bearish mode. The S&P and Nasdaq are still more so in neutral mode to longer term, still bullish unless they take out that weekly rotation zone. I'll really be seeing this. The end of this week is going to be very telling. The end of this week with your PCE numbers, whether that gives a little short-term boost. If they come in hot, I'll be watching potentially to kiss this market in the short term goodbye if they come in hot. I'm thinking we may take out Friday's lows in ES, but we won't trade unless price action proves it. Yeah, I mean, it's all going to depend on those PCE numbers because we've already had the CPI coming in hot. We have inflation expectations coming in hot. We had the PPI coming in hot. Now, everybody, PCEs are what the Fed pay. Well, the Fed keeps changing their mind what their thing was. Remember when it was super core, and then they abandoned that. They're just going to find any number that still proves inflation is going in the right direction. And if that's the PCE this Friday, then the markets will cheer it on. But you know what? Until the PCE comes in hot. But again, you need a pattern to trade. You don't. At least I don't trade what I think's going to happen. You got to trade your patterns because if you trade what you think's going to happen, and the market doesn't need to do what you think's going to happen. All right, with that, let's just peek at the open. Let's just peek at the open. So it'll pull back in the open. Resistance now going the open is about 60.55, and then you still have to get above 60.62 to get anything bullish without a pattern. Not a super strong tick opening. This is not a super strong tick opening. So I need to see it to get into a bullish mode. I need to see it hold key support or make a bullish pattern. Because any bounce here has to prove it can get through some pretty significant resistance levels without making a stronger pattern here. Like again, this overall the European session, which I was not up for, but this is the kind of stuff you're watching for. This is the kind of stuff you're watching for. See here, double bottom pattern. That's reversing this move. And then it ran off of that. You get to be patient. You don't just try to grab something. And if something runs away without a pattern, not every trade is your trade. There might not be a setup that's your setup to buy or sell the market. So remember that. All right. With that, hope everyone has a wonderful trading day and wonderful trading week. Again, trying to get back above resistance now. So on any pullback, watch for 60.55 to hold. And then 60.62, 60.63 is very, very key. I'll talk to everyone tomorrow. Bye for now.